Hi everyone, welcome to the class of HFT 4464, Hospitality Industry Finance. Well, I wish I could meet with you in class, but due to the pandemic situation, we have to meet virtually. The mode of classes doesn't really make much difference as long as you study by yourself. Guided by my instruction, you'll be fine. Now let me just tell you how this course is structured and then how it will be conducted. First of all, this is W mode. I originally requested face-to-face mode, but due to the current situation, the UCF authority has informed me that this course has been converted to a W mode. It doesn't matter. I'm going to post all the material, and then I'm going to give you a slideshow of my class material, just like I lecture you in the classroom. So I want you to follow my guidance thoroughly, and then there is nothing you should worry about. First of all, everybody has an access to Canvas. Then go to the announcement on Canvas and regularly view it. I make a frequent announcement at least every week or so for new announcement. Whenever I make a new announcement, I'm going to send out blast emails to you. So using your night's email, check up your incoming mails. These days, the blast emails may fall into your junk folder. It is always nice to check up your junk folder and then clean them up. Among them, you may find pretty valuable messages anyway. Now then, all the course material will be posted in the module. All right? Then module is accommodating all the course material, and it is divided into a few different modules anyway. Each module will have your self-study guide on each chapter. I have summarized all the chapter material of the textbook. Because of that reason, you don't have to buy the book. I only recommended that textbook. You don't really have to buy it. I already have included all the summaries that I have prepared out of each chapter, and then they are going to be posted online under module. And then all those are titled self-study guide of chapter such and such. So you have to read them very thoroughly, repeatedly, multiple times, until you become quite familiar with what's being introduced in such material. Now, the self-study guide includes class notes, which is made of PowerPoint notes inside it. But you will see a separate PowerPoint class notes file underneath self-study guide. Then underneath each PowerPoint slide note files, you will see slideshow file. And right now I'm making that for the introduction. And once this is done, I'm going to post it onto the module underneath PPT file. So you can actually study through the slideshow, just like you're attending to listen to my lecture, and go back to the PPT file and then the self-study guide, and then you can review them by yourself. Due to the memory storage problem of obstacle of the Canvas, I cannot keep slideshow files for long. So consider slideshows a class lecture that you can have by attending classes. But once that material is gone, I'll have to take off that slideshow file because it takes a lot of memory so that I can load up the next files anyway. All right, and then module is there, and then you also have to open up regularly a quiz and quiz menu. There's a quiz 0 available right now. That's mandatory by the UCF authority. The result is not going to be used for your grading at all. You will still have to complete that. If you don't like to take it, just open and close. That's going to be fine. And then this course will require one term paper. I'm going to introduce to you the details of them later. All right. So this is how you can conduct your own study in a W mode of this course. Now, my name is still young. I found a few students in the list that have taken the previous material with me. To those people, yeah, my name is still young. Those who are new to me, well, my name is Young. My full name is this way. You can see it here. I usually use this initial for almost all purposes, and this is my full name, but don't worry, you can just address me this way. An office hour. Monday and Wednesday are my office hours from 3 to 5:30 p.m. Monday, I'll be physically in my office as long as I'm allowed to be on campus. Due to the current situation, we never know when the new regulation will kick in. Anyway, I'll be there, but you can always send me your emails through a night's email address, but I want you to keep up with the social etiquette in communicating. Because I teach quite a few different courses, I want you to identify which class you belong to and then your name and things like that. And today's college students don't seem to understand that there's a certain etiquette rule in communicating. I want you to become polite so that I can be polite to you too. And if you want to share your ideas or questions with your classmates, you can use discussion menu on the Canvas too. It works like it looks like an email, but that is open to everyone. Everyone can access to it and then share your idea with you. And then if important issues are discussed there, I'm going to give you my opinion as an answer to that, so you can rely on that too. All right, let's move to the next slide. Important dates. First of all, quiz 0 must be completed by the first week's Friday, which is August 24th. And then you will have to go through 4 tests, including final, test 1, 2, 3, and final. And they will be taken 5th, 9th, and 13th week earlier. Okay? And then final exam is going to follow the UCF schedule. That's the 16th week. And then exam score will take up 70% of your grade. So if you just do not get a higher grade in one of these tests, you still don't have to worry about that anyway. Total exams will take up 70% of your grade, and 30% is coming from your term paper. And during the semester, I'm going to give you some material for extra credit. And I'm going to use my own discretion to provide you with extra credit. That's going to be up to 10 extra points. Okay, so that's the kind of the exam plan. And this is how grading is done. Each test comes with its own weight. First of all, the first 3 tests will take only 15%. This is why I had to emphasize that some poor score of a certain test will not really hurt you much. Even if you screw up a lot, you are losing only 15% on the first test. Second test, 15%. Third, 15%. So how do you really keep up with your score record? Now, when you take the test, I want you to keep the score, original score, separately, and multiply 15%, 0.15 into it. So in case your first test turned out to be 75 points, now 15% of that, which is 11.25, will be used for your grading. And same is true with the second one, third. The final exam takes 25%. So if you add all these percentages weight, it will be added up to 70%. So 55.3 is the total weighted score, but this is based on 70%. How do you convert this into 100% base? Simply divide this by 0.7. That's how you get that. You're going to learn techniques like this more intensively during the semester. This is called weighted average calculation. We are going to use this approach a lot. So I want you to become familiar. And 30%, as I told you, is coming from your term paper, and 100% of my experience during the past. All students have done very well on their term paper preparation. And this can be a team work if you could form a team up to 4 people. That's going to be fine. Otherwise, you can do it individually. And last spring semester, by the way, everybody did such a good job. I was so happy to see that result. And then, in fact, the class average of a term paper turned out to be 90%. So you multiply 90 by 30%, you can actually add up 27 into this one. Then this plus this becomes 82, and that's pretty decent result. This is how grading is calculated from your performance. Let's move to the next slide. Hospitality Industry Financial Management is the textbook. Title 2, and then this course is about developing a big picture, in other words, bird's eye view over business. Up to this point, you have taken, most of you have taken financial accounting and managerial accounting, which is becoming very important base material. Some of you may not have taken managerial accounting yet. It is still okay. We used to require both, but due to a certain procedural obstacles and problems that many graduating seniors had to face, we have eliminated managerial accounting from the required list. So as long as you have taken financial accounting and know how to read financial statements, you're going to be fine. And one section is repeatedly introduced here that you have covered in the managerial accounting, that is ratio analysis. But if you have reasonable amount of common sense, you can easily follow through that anyway. So financial accounting, what did you learn in that course? Financial accounting creates information, and that information is coming from the financial statement. Now in this course, they are becoming data. Data are ingredients of more refined information, and once a certain refined information is generated in our logical thinking process, that information is becoming raw material again. And then we can actually go further on our analysis and then come up with highly crunched and compressed information. That is the whole training process of this course anyway. So in that process, you're going to use and rely on some basic math skills. It's not about math, by the way, and then we are using very entry-level equations, so you don't really have to worry about, too much about the math. Math equations gives us a certain path of a logical thinking process. By using data, we organize data into the usable, more refined information is always coming through mathematical approach. However, we are not doing math in this class. We only use several equations, so don't worry about that. This is textbook. Again, I have to emphasize that you don't really need to buy this textbook. However, if you already have purchased the textbook, keep it. That was your investment. Once you invest your money into some material like that, you have to reap the biggest and most result out of it. However, most textbooks are written by experts, and they do not really do a good job in writing books. Actually, that applies to me too. When experts write a book on a certain topics, they just put in everything that's necessary into that book, and then textbook becomes like a manual. You never learn anything from the manual. You can find out necessary skills through the manual and then apply that to what you do. So that's why I do not really recommend purchasing this textbook. Instead, already I have posted, and I will post all the chapter summaries, compressed version, so that it's much easier for you to read and grasp. So that's going to be presented online. You can go through that along with the class notes. Then all other material will be posted online too. And then also you can if library is open, by the way, you can go to a library and then pick up any financial management textbook, either for our program or in the business school in the library. That's okay. You go to the index part and pick up the topic, an issue, and then go to the relevant page, read it through. That's going to be fine. In fact, I want all of you to do it that way. It is always nicer to accommodate different perspectives on the same issue. Then your knowledge horizon will be expanded into a much wider area. All right, let's move to the next slide. Critical success factor to become successful in this course. Financial management is a very important part of our life. We cannot really eliminate a financial part in our daily life in today's world. If we are living like a Robinson Crusoe on an isolated island where there is no one else, maybe financial management is not so important, but it's not thinkable. So you really have to become familiar with all the topics and issues that are relevant to finance or financial management. And the only way to do that is reading class notes first. But that's not good enough. You have to expand your reading horizon into many topics and news releases on economic conditions, political conditions, social cultural changes, technological advancement, ecological conditions. If you classify all the news releases that you read in today's world, you can actually put them into these 5 categories. And then all the elements that belong to each category are interconnected with one another and create a lot of complicated situations, and we live in such a world. To do that, I want you to start reading newspaper, hard copy or online, it doesn't matter, such as Wall Street Journal, Financial Times. I used to put in New York Times here, but New York Times has become too much ideological propaganda material these days, so I eliminated that. In other words, New York Times, to my personal opinion, that's my personal opinion by the way, has lost its fairness and centrality. So I would rather go with Financial Times and Wall Street Journal. They are a lot more central and fair to many people. And then news magazines such as Newsweek, Economist, and other trade journals. Read some articles. You don't have to really everything cover from cover to cover. No one has enough time to do that. So I want you to set up your personal electronic device, such as a cell phone or a pad, or even computer or Google, and then regularly follow through a certain information that you are interested in. That's how you can create a comprehensive understanding of all this. So Google Finance or Yahoo Finance is a pretty good site. And then financial or economic news is very important material that you have to follow through to be successful in this course. And then create a habit into that direction. If you don't start it, you will never get it. All right? So that's a critical success factor. And then this is a kind of concept map of the topics that you're going to go through. This course will start with the introducing business environment and performance analysis. Performance analysis is actually about ratio analysis that you have learned. We are not going to spend a lot of time in this. I'm going to post relevant material that might be quite familiar to you because many of you already have taken managerial accounting, and chapter 5 of managerial accounting was about that. Along with business environment. What is this environment is not particularly ecological environment. Business environment is conditions that surrounds the business world. That's what it says. All right. So we are going to cover these topics during the first 4 weeks. And along with that, I'm going to introduce to you how financial market works and what it is, and then what kind of financial instruments. In other words, investment materials are available in the market. You are going to learn a lot of those things. And then, along with that, investment and return and market growth and how to assess those things will be broadly introduced here. Now that all investments are made with an expectation of return. So investment is made and return comes back. But return is never guaranteed in any situations. So that means investors are always taking risk. Then how do we assess risk is going to be introduced in the next couple of weeks. So risk assessment. Now then we have to just briefly touch the surface material of statistical approaches, such as means, average in other words, standard deviations, variance, correlation, that kind of things. All those are relevant in risk assessment. That is necessary part of investing decisions. Now in that you're going to be introduced to a very interesting equation, very simple and easy. However, to understand the meaning of this equation, which is called CAPM, Capital Asset Pricing Model, will be introduced in this part. You have to understand all this to get here. Now then, once this part is done, you will be introduced to the concept of time value of money. Money's value changes over time. That's what this is about. So practical material that are involved in here is basically present value and future value. They are presented in annuity forms or perpetuity forms. These are some technical terms. Many of you probably don't understand what these are. Don't worry, we will cover this with more details as time goes by. Then, once this is done, now then you are really going to consolidate everything into valuation process. Valuation process is just another very fancy term of putting the price tag onto your investment. When you invest, what do? We have to make the payment. When you purchase a bond or a common stock, you have to pay for it. When you purchase your laptop computer, that's an investing. You have to pay. How much do you pay? Well, of course, the price tag is already determined by the vendor. But think of that situation this way. If you want to pay, let's say $800 for your the laptop computer. Now you're agreeing this investment is worth the investment that I'm making into that laptop computer for my future use is worth $800. I'm fine with that, and I can have more returns. It may not be monetary returns, but all the returns that I'm going to receive by using this is worth at least $800 or more. That is the concept of investment and return. So that process will be introduced from around this time, and then it will continue to this. In that process, you're going to be introduced to a newer concept of cost of capital. Actually, this is another name of a risk assessment. So within this time frame, the risk assessment that you cover here is going to convert itself into the concept of cost of capital, which is cost of debt, cost of equity. Now here, CAPM is reintroduced. That is going to be called WACC, Weighted Average Cost of Capital. Now, this is ultimate risk assessment. It takes long for us to get to this part. We have to go through all this. Then finally, the last 4 weeks will be spent in valuation of any the specific company, business the firms, public companies, by the way. And then the process is we have to forecast their performance in the future. So finance is always about the future by looking into the historical pattern. The reason is return is always coming in the future, and then investment is being made now. So that's why finance works this way. Now then, during that process, the weighted average cost of capital is becoming a discount factor. You may not know what this term means. Don't worry, you will learn this just around this time. And then, toward the end of the semester, A equals L plus E comes back. However, it's different at this time. A equals L plus E is an accounting equation that you have learned in financial accounting class. Asset value amount is always the same as amount of liabilities and equity combined together. However, when you go through all this process, this becomes market value balance sheet. So in other words, all these steps are necessary for us to understand the market value of the business, and then these are technical steps in a concept map format that we are going to go through. So if you became a little confused, don't worry, we will just go through all the detailed techniques and concepts individually. When you pay close attention to each week's material, you will gradually develop a pretty solid knowledge that combines into all this, and this course will become quite fun. Trust me on this. Okay, business environment is presented this way. First of all, business firm is here just like an egg. Now, all business firms are included in a certain industry. We know that. When you look at a certain business firms like Apple or Hilton or Marriott or whatsoever, you do not think of that company only. You have to think of its competitors, its customers, its supplier chains, and then regulator groups that imposes a lot of influence over them. Those are industry. Now then, those are always influenced and affected by social cultural trends, economic conditions, political situations, and technological advancement and ecological situations. Then these 5 factors mingle together and create huge trends. Those are called chain drives, factors that drive changes, trends in other words. We cannot control them. We have to just be in those flows, by the way. For example, what is the hottest topic that we are concerned about all the time these days? Apparently, I'm pretty sure all of you will answer. It's COVID-19, coronavirus. Now, coronavirus is only one small virus. Now, what is that? That has come through ecological disaster. And then a lot of technology is involved into it because we want to prevent it from spreading. And that has caused a lot of economic disasters. And then a lot of politicians have come up with all kinds of saying to control that. And then all this have affected our way of life so differently these days. Isn't it right? Now then, when you think like that, today's customers' behaviors are very different through the regulators impact and then many others. We do not conduct our consumption patterns as we used to. It's different. We don't go to places where the large crowds are gathered. and the regulators already have banned them. Now, because of that, a lot of competitors and businesses have gone down. That has disrupted supply chains, all kinds of things. So you have to think of all these impacts, like an example that I have just presented to you. When you think of a certain business, now then, you have to think of the future of a certain business and the industry into the future by giving the attention to what's going to happen to all this in the future. This is what's happening right now. How will they change in the near future and long-term future? Then, how will this business accommodate such changes and then navigate through that turmoils and then become successful? Will it become successful, or will it just disappear? Those are all parts of financial analysis. Okay? I hope this has made sense to you, and then we'll go through this especially more intensively in the next 4 weeks. Okay, now then, analysis of a business firm's performance, business performance. First of all, it's actually coming from accounting perspective. First of all, accounting taught you A equals L plus C. That was accounting equation. However, that is coming from the conceptual background of this. A firm, business firm, has to finance through their financing decision. That is, how much to borrow, how much equity should be involved into a certain business project, which is investing decision. When a business comes up with the investing decision, they have to secure their funds through financing decision. Financing decision is always about bringing debt and equity to launch the business. Once a business project is launched, the business has to make plenty of investment into its asset to sustain it. Once the business project is launched, the operation starts. Through operations, business brings in revenues and expenses are incurred. As we know, revenues minus expenses is called profit or losses. That is the basic concept of return. Profit is actually surplus that are left after spending all the expenses from the revenue. So that this is the first wave return. Now that must be reinvested. It goes back to the asset. By doing so, asset volume grows so that more revenues are generated. More revenues will automatically bring up more expenses. Now then, what is the result of that? Is the profit growing, or because of the bigger expenses, is the profit decreasing? Now we have to start analyzing them. So at that point, we have to analyze this point. Is this return good enough for the company? And then, as we know, profit, once it is added to asset, it is also added to equity. So finally, the equity investors got their return through this. Now then we have to expand our analytic points into this. Is this return good enough to pay to the creditor? Creditor must be paid for their loan, interest and principal too. And at the same time, what about investors? Is it good enough to them too? So this kind of series of questions is what we are going to use in our task of financial analysis in this semester. Okay, when we put that into a little more familiar diagram, it works like this. Those who have not taken courses with me may get a little bit confused at this point. So many boxes and arrows. Jeez. But don't worry. Just pick up any box anywhere. If you start from here, it is coming from here, is it right? Revenues. Now, this is connected from customers, double-headed arrows, and then it is connected from this one too. What does it mean? For a business to generate revenues by serving customers, it has to have, the business has to have its asset here. So asset has provided the platform to generate revenues. That's what it says. Then revenues include expenses here. So you see, you follow this arrow here. So all the expenses are taken away, including taxes. Then the result is net profit generated, surplus left over inside a business from the revenues. Now, as I told you, it is added back to the asset. I'm going to explain why it is added back to asset later on. At the same time, it is added to the equity under this title, retained earnings. I'm sure, I hope actually, all of you still remember this term. This is reinvested amount from the operating activities. By doing so, asset grows, equity grows, and investors are happy. Now then, what are these the back-headed arrows mean? Oh, before we go into that, let's see. Assets are coming from what? For a business to have asset. Asset is the result of business's investing activities. For that reason, it is sometimes called resource allocation. To have this company had to finance first. Finance. Obtaining necessary cash, either through debt from the creditor or equity from the investor. So these left-sided arrow means money provided by the creditor, which becomes a liability of the business, and money provided by the owners or investors, that is becoming equity of the business. Debt and equity, L and E, combined together becomes asset. Asset is used to generate revenues. Revenues are the source of profit this way. So this is how you will understand the diagram like this. Now then, here, this back arrow means creditors and investors also demand returns. For example, in this case, arbitrarily, creditors want 8% of return on their contribution. So they lent $2 million and they ask, I want to have 8% return on this. So 8%, that means $16,000 of interest must be paid back to the creditor annually. Then we have to find out, is this company really strong enough to provide that? Is this revenue big enough to cover that interest? That is part of analysis that you are going to conduct. Now then, investors. Profit is becoming final return from the operation. It is added back, reinvested back into the business. Also, it is added back to the equity under retained earning. Is that good enough to cover 12% of this? That is another analytic point. So those are presented in this diagram. So this is actually flows of money presented in this diagram. Money starts from here. Financial suppliers, investor groups. They either lend or invest into the business. Business finances them, and then creates asset, reallocate their asset into usable resources. They are being utilized in revenues, and then by serving customers, by the way, serving customers also incur a lot of expenses. And after taking out all those expenses, let's see how much profit was generated. Is this good enough or not? So it works this way. Okay, so this is what you're going to do in the next 4 weeks, by the way. You're going to be bombarded with a lot of material from me. And then again, as I told you, start reading self-study guides. Once you read them thoroughly and then understand them, go to the class notes, which was already explained in the self-study guide, and then go to the slideshow lecture file like this. By doing so, make sure that you understand. And I have to tell you that lecture show slide files cannot stay on campus for long. Most likely 1 week, maybe a little longer than 1 week, but mostly within 1 week it will be eliminated. So consider that attending classes for lecture. So make sure that you watch slideshow files and help yourself understand this, and then review with the PowerPoint note files and the self-study guides. If you repeat those activities week after week after week, I'm pretty sure there is no chance you can screw up. You will have to end up very well with this course. Trust me. So I'll meet with you in the next slideshow file when it becomes available. Until that time, have a good time. Bye-bye.